Folks, welcome back to the Tailored Tax Show, the podcast that helps highly paid, highly taxed, high profile, high net worth, and ultra high net worth taxpayers save a bunch on your taxes. I'm Terrence Taylor, the co founder of Tailored Tax. I'm an enrolled agent and I have my MBA from Harvard Business School. This is my partner, Big Al Darnell Jr. So, what's up, Big Al?
Big Al, I love my mom. And I'm also an enrolled agent. And I'm also a co-founder. But I did not also go to Harvard, but I do have an MBA. So
Let's
yeah.
have his MBA, folks. Today's episode, Big Al and I thought it was time to revisit Trump and taxes. Trump has
Miss
been in the news for many things, folks, but we're going to zoom in on our lane and stay in our lane. We're going to talk about Trump and taxes. Big Al, when we planned for this episode, we were chopping it up and having so much fun looking at what Trump is going to do, as well as the speculation about what he might do.
yeah.
And we thought, let's narrow it down to two things and just jump into a conversation about them. So, one, making the Trump cuts from 2017, which I believe was called the Trump um, Jobs,
Tax Jobs Act.
yeah,
Yep.
Jobs Act, permanent,
Yep.
and what we like about that, and maybe if there's anything not to like about that. And then second thing is, what if Trump gets rid of the IRS? What would happen? And maybe there's a third thing, but it's not so clear if you could actually have making the tax cuts permanent and also then using tariffs to replace income tax. So like we're most likely going to focus on the first two, but the third one might sneak into the conversation. So Big Al, let's just jump right in.
Yeah. They all three of them that you brought up do sound like very competing priorities.
Yeah,
What do you call it? Yeah, so because yeah, if you get rid of the IRS, there's no need to extend the 2017 TCJA.
got
And then if tariffs take over, I guess that's the only way that you can uh, get rid of the IRS,
mm-hmm.
because Trump was talking about an ERS, an external revenue
Right.
service.
Yeah.
So, yeah, we were just looking this up, and so I believe our income taxes bring in about $3 trillion a year to
Hold on,
the
Big Al. That's a big number. You got to stutter. Trillion dollars, folks.
yeah, every
Yeah.
single year. So now but all the money that we get in imports, I think is around 3 trillion. So you need to do 100% tariff in order to replace that. But of course, it's not that simple. Um, what you get to also, I'm not sure how much it costs to run the IRS every year. So that's also saving. So like, so let's just say you get rid of the IRS and you get rid of, I don't know, $100 billion worth of expenses. So that's $100 billion in savings, but you're getting rid of $3 trillion of income. So that still puts you at like 2.9 trillion of income that you would need in
Slight
order to
deficit.
replace it.
Yeah.
But yeah, so now here's the thing. Oh, we didn't even bring this up, but have you heard about the golden visa?
Yeah, let's leave that alone, Big Al.
Okay, because I was just thinking about, I think
I
that
want
might
us
be
to
another way
focus.
replacing some of that income,
Think,
that
okay. All right,
tax
folks.
revenue.
You saw
Yeah,
the
but
excitement. You guys, I'm sorry to talk over Big Al, but you saw his excitement, so I can't refuse Big Al. This is let's
well,
include the golden visa. Let's include the golden visa.
yeah, well, no, it's just he was thinking about that as a way of like charging people like $5 million for
That's
a golden
that's the
visa.
plan. How
Yeah,
many people would he need to charge to be able to replace trillion dollars?
man, I think it's like 200,000. Or no, you know what? I don't even think my thing goes up to $2 trillion. See, 2 trillion. How many zeros
Three,
is
right?
that?
You said
12?
three.
3 trillion. Thank you.
Yeah.
3 trillion. That's 3 billion. All right, 3 trillion divided by 5 million. We need 600,000 people that applied. Now, 600,000 out of the 330 million that we already have, or is it 33 million?
We have 330 million. Yeah. Oh, you talking about immigrants or the full?
People in America.
Yeah, 330 plus and probably growing.
Okay, so that's not even a full percent. So it could, 600,000 could be something that could happen over the next 4 or 5 years. But
You see why Big Al gets excited? It's like you just need 600,000 people to pay Trump 5 million. I mean, not Trump, pay the U.S. 5 million.
but
We're
from a
good.
practicality standpoint, oh, what would it take to truly wind this thing down? And then we're talking about government employees, and they have government pensions or 457B plans, and then there's
Hold on, hold on. You remember there's a gentleman named Elon Musk who is like the wild card in this equation. He might fire the entire IRS through an idiot.
yeah, they just fired like 6,700 employees.
I mean, we shouldn't make light of the issue, but it
No, no, not at
is
all.
losing your job is not something that's laughable. But the fact that we can even be having a conversation that it's possibility that with the Department of Government Efficiency and Elon's current approach to things, yeah, it's a possibility that the IRS could be wrapped up,
Yeah, well, I guess so. I guess they would have to be.
but not a probability. It's possible, but I don't think it's probable.
You don't think so?
No, but go ahead. I interrupted you. You were going to say.
No, no. I was just thinking about all of the practical components of getting rid of the IRS. Something that's been around for several decades, over 100 years, I believe. So now, with that being the case, I probably wouldn't venture on the side of the IRS being gone anytime soon.
Yeah.
It'll be a strong push, and I think it'll take a lot. I think it'll take his whole 4 year term in order to do something like that. But by the time the 4 year term is over, I don't think anybody else is going to withstand whatever it takes in order to close it. You know, they're not going to keep pushing it like that. So now let's talk about the extension of the
CJA,
permanizing, or making permanent
impermanent.
the Tax Cuts and
Tax Cuts
Jobs
and
Act
Jobs Act. Yeah, yeah.
2017. What aspects of the TCJA do you like?
Man, first of all, shout out to Donald Trump. TCJA, legit, right? That particular act probably did more for taxes and for Americans saving on their taxes than anything else. I read a recent study, and I'm trying to remember who the authors were, but I read a recent study where they looked at who saved the most from the Trump Cuts and Jobs Act. And at the end, their conclusion was actually it benefited everyone, right? Because first of all, making it permanent implies lowering the tax brackets, right? So the highest tax brackets under Biden, when he came, he put it back up to 37%. Trump had already shrank it to 35%. And if you went through the tax table, the brackets all were shrank in some way. So people benefited from that. And then even the amounts were changed in some way. So there will be tax relief for most Americans. So I love that. But BL, you know what my favorite is. It's those strategies that allow our target audience and the people that we are trying to help the most continue to save massively on their taxes. So here goes. It's called bonus depreciation. And because it applies,
What's bonus depreciation?
I'm going to tell you, and because it applies to real estate and any assets you're using in a business to generate income, it is absolutely amazing and it can help highly paid taxpayers. I mean, highly taxed, I should say, taxpayers. So regardless of where you fall in that spectrum of highly paid, high profile, high net worth, or ultra high net worth. And here's the beautiful thing. Bonus depreciation was Trump's gift to businesses to say, hey, make investments in assets that will help you to grow your business. And the government is going to allow you to write off 100% of the cost of that asset in the first year. And when the TCJA came into being, that basically went from 2017 up, I think, to 2022, 2023. Big Al, you remind me, but I think it was 5 years, 2017 to 2022. You could get 100% write-off on an asset. So for people, for example, who follow our strategies and look at our levers like real estate, you get a rental property, for argument's sake, your rental property, you bought it at $1 million. you probably put up 20% minimum of that. So now you can write off 1 million from your bill, especially when you use our strategies to qualify for the statuses that allow you to unlock the full power of using real estate to legally reduce your taxes and perennially reduce your taxes. So I love that, Big Al. What about you?
No, I think the bonus depreciation was great. What I've seen help a lot of my clients is that increased standard deduction.
Mm-hmm.
So that standard deduction used to be like 6 or 7 thousand,
Mm-hmm.
and now it's up to like how much is it? Almost 14,000,
Yeah.
$15,000 per person.
Yeah.
So that was
14,000
a
some
huge
change. Yeah.
benefit. And then also I'll say this. I'll say this. Probably my personal favorite would be the Section 199, the
Yeah.
20% pass through
Yeah.
income, pass through business income exclusion,
Yeah.
because that automatically gives you, because a lot of people, most people have LLCs. At
Mm-hmm.
least my practice, they have single member LLCs, or they have some sort of partnerships that where the money passes through to their personal return. So now to be able to get a write off on that, just for the aspect of owning a business, because it's not a write off because it's going to be double taxed. The only money that for real is double taxes is going to be your C corp dividends that you receive from your C corp. I guess there's some other ways with certain K1 income, but nonetheless, to have that 20% write off on directly on your tax return, I think is a beautiful thing, and made a huge difference, because a lot of our planning, especially at the basic foundational level, is starting a business. And
Yeah.
then when you're starting a business, a lot of people aren't starting these businesses with $1 million+ or whatnot. They're starting these businesses with savings or some of their retirement income, but they have the potential of making millions of dollars. And then when they do, and they're able to get like a $200,000 write off, that's beautiful. Now, what's one of the things you weren't a fan about
Well,
with the teacher?
hold on before we even get to that. I wanted to add one more, so I want to cheat.
Okay. All right, go for it. Go for it.
I want to have my cherry or my cake and eat it too, whatever the right expression is, right?
Yeah.
Big Al, I loved the estate tax
Yes.
exclusion being
Yes.
raised from 5
Yes.
million or thereabouts
Like 14 million.
to now, I mean, it kept growing, right? Because of inflation, but like that was amazing. And that's helped so many of the clients that we work with from a planning point of view to help them to ensure that all that hard work that they would have done, they can leave it to the people who they want to leave it to
Yep.
and not have the government come in and take most of their estate. So I love
Yep.
that. Now, what didn't I like about the TCJA? Well, this is a bit of like reverse logic if you think about it. I didn't like the fact that it expired.
Yeah. Yeah.
I wanted it to stay permanent. So I'm a
Yeah.
fan of Trump on that from that point of view. And I want those tax cuts permanent.
Okay, cool. My biggest qualm was the
Hmm.
salt limitation.
Oh, taking away salt. Yeah.
Brother,
So Big Al, are you salty that he took away salt?
very, very. I'm like thinking pink Himalayan sea salty about that thing. And it's not just Morton, the pink Himalayan level salty.
Like it, like it.
Um, because
Truffle salt.
there we go, a higher level. Because the thing is that, especially, so I live in Oakland, California. And
Yeah.
well, the crazy thing is, in Texas, there's huge property taxes as well. So like when we got clients that are making $500,000, quarter million, even $250,000, like their state taxes are gonna be about 5%, 6% of that. So now we're talking about, that's already $12,000 by itself. Not to mention the property taxes if they own a home. So let's just say if they make 500,000, the house is worth 500,000. They're probably already going to be paying, I don't know, $40,000 in
Yeah.
state and local taxes. So
Yeah.
now to only be able to write off 10,000 of that, it's tough. I've definitely saw a couple of situations where people's tax returns where they were getting back like I don't know, $30,000, $40,000 because they were writing off their itemized deductions were literally 150 grand, 200 grand. Now that limitation is, I haven't seen a Schedule A itemized deductions above 100 grand in a while. I'll say above 150 grand because think about it. If you could only write off mortgage interest up to $750,000, that puts you around 50, 60 grand. Depending on the interest rate, it could be up to 75 grand if you got like a 7 to 8% on $1 million or $750,000 home. And then $10,000 for the state or taxes that you could write off. And then the only thing that really maxes it out is charitable contributions. So yeah, it's that's my biggest qualm with it.
Actually, you just reminded me of one small qualm that I also had with it. When we help clients that want to do business internationally,
Hmm.
now it's not so easy for them to deduct the expenses of the move to
Yeah,
set up
that's right. That's right.
international.
Oh,
Yeah.
100%. Yeah, the moving expenses really. That's right. The TCJA took away the miscellaneous deductions above 2%.
Yeah.
So yeah, so that's a thing. But so for all the benefits that it had, I think if you do a cost benefit analysis, the benefits outweigh the
Oh,
costs.
vastly outweigh.
But yeah, which is why we want it to be extended, and we'll be definitely
Yes.
checking out and making sure that everything gets passed.
Mr. President, please go ahead and make it permanent. I know you have a way with Congress and you seem to be looking for that one big, beautiful bill. Just make sure
Yeah,
that TCJA is part of that. TCJA all the way, baby.
yeah, definitely. So yeah, so between the TCJA being extended, tariffs, and getting rid of the IRS, we already see the tariffs happening. It was literally this morning that the
Yeah.
uh, the, the 10,
25% on
20%,
Mexico, 25% on Canada. I think an
yeah,
extra
China,
10% on China.
yeah,
China is taking us to the World Trade Organization, complaining about our unfair trade practices.
there it is. So that's already happening. We'll see how everything unfolds. I don't see because I was mentioning that, and Terrence brought up the great idea or the great thought that that doesn't directly impact our income taxes, but it does impact, let's just say, sales taxes because if the prices
Yeah.
increase. So, but still,
Yeah.
it's something to be aware of because it has other implications,
Yeah.
including your jobs.
Yeah.
So
Well,
go.
I just wanted to chime in, and folks, Big Al had the great counterpoint of, well, he's planning to potentially replace the Internal Revenue Service with an External Revenue Service. So that is a potential direct impact on taxes. But as we said right in the beginning, it's a prioritization thing, and it might be an or as opposed to an and. It's hard to see all three of these things that we've measured coming to fruition under one administration in 4 years. The clock's
So,
on, right?
one last thing. Let me ask you this:
Yes, sir.
if you had your druthers and they said, "Hey, our business is built around
Yes,
taxes,
sir.
right?" And they
Yes.
said, "Hey, let's get rid of get rid of the IRS, and it could happen in the next 2 years." So boom, we're not going to have any more
Hmm.
IRS after the year 2026. All right.
Hmm.
Would you be for it or against it?
I think I'll be for it because why do we get into this space? Why do we get into leveling the paying field? Is because most folks don't understand the rules and how to use the rules to their benefit. So if
Yeah.
there's a simpler way of saving people money, in other words, putting ourselves out of a job, player all day, let's do it.
So I agree wholeheartedly. I'm definitely for because the thing is we're trying to help people navigate
Yeah,
around the
yeah,
onerous
yes,
laws and
yes.
hurdles that they're putting up.
Rules and
So
hurdles.
if you just take away the entire race altogether, then that's cool too because
Yeah,
the way that we can help you reaches far beyond just the IRS. We're talking
for
about
sure.
creative models of business structuring
Yeah,
and implementation that extends beyond the IRS. However, because of our certifications, because of our experience, and because of our passions with this, a lot of it with the IRS in place, that's probably the first place that we go to because it applies to absolutely everybody.
that's right.
Absolutely. You can't get away from it. So let's
That's right.
attack the
Yeah.
foundation of
Yeah,
your financial household
yeah,
altogether. Go ahead,
yeah.
Terrence. I'll let you take us
No,
home.
I'll take us home with this thought. It's so true that the way we work with our clients, we end up helping them see, first of all, that the tax code is a playbook. But the most important thing is to start off with the vision you have for yourself, folks. Like, what are you trying to do, right? And the values you have, and then the valuable things that you have. And all of our strategies, all of our consultation centers around that to make sure that you know how to get things done the way you want to get things done and stay on the right side of the playbook and do so perennially and continue to save a bunch on taxes legally. So, folks, this is what we have time for. If you want to play around with tax strategies GPT, you have some questions or some specific things you're looking at, you can check that out on the OpenAI GPT store. If you want to reach out, get in touch with Big Al at taylortax.ai, BIGAL at TAYLORED or Terrence, TERRENCE at taylortax.com. Taylortax.ai. Thank you for spending time with us. See you soon.
Yes.